Welcome back to Market Secrets Investment Series on tax savings. In this episode of this series, we are going to learn about various tax saving options available for employees. So if you are working for any company as an employee, how to save taxes? What are the various tax saving options that is available for employees? That's what we are going to discuss today. But before we get started with the today's session, I'd like to mention that we have recently launched Algo Traders Program ATP from Market Secrets. So if you are someone who is interested in learning end-to-end algo trading, check out our ATP program. I'll leave the link to it in the description section of this video. So with that note, let's jump into today's session. That is how to save taxes. So let's start with the first option, which is food card or food coupon. So a lot of companies provide various types of food cards or food coupons which you can use to pay for your food related expenses like groceries and stuff. So a lot of companies provide at least 3,000 rupees, but there is no direct capping here. It depends on the company, but at least you'll be easily be able to save around 3k per month without taxes. So this food card or coupon, whatever that you get, right, the amount that is put into these coupons or cards, right, that's free of charge. You don't have to pay any taxes on that income. So that's a tax free income for you. So this will easily reduce your taxable income by 3k per month. So that accounts to 36,000 rupees on an annual basis. So 36,000 rupees will be deducted from your taxable salary if you go through this route. And I'm saying 36,000 rupees, it's not a fixed number for everyone. Some companies provide higher than that, few companies provide lower than that, but that's an average number. Likewise, right, there is a provision to provide fuel expenses tax free as well. So you can easily avail around 2k per month as fuel expense from your company directly. Again, this is an expense, so you don't have to pay any taxes for this income as well. But again, this varies between companies. Likewise, for mobile payments, that is mobile recharges or mobile postpaid bill payments, right, you can easily claim 1,000 rupees per month. So this again varies between companies, but again this income is tax free. So if you put it all together, right, this easily comes around 6k. But there are a lot of other provisions as well, like some companies provide a tax deduction for e-learnings or the books that you're purchasing. So a lot of companies provide tax-free income like this up to 15,000 rupees per month. Yes, per month 15,000 rupees. So if you put it for a year, right, it's almost 1.8 lakh rupees, which you can deduct from your taxable income. This won't even come under your taxable income. It won't even be available in your pay slip, because this goes in a different route. So you won't say it in your pay slip as well. You don't have to show it anywhere as well, because it is a part of your expense. So you generally have to claim it through your company, and if you are not able to claim this limit, they'll settle all this amount together at the end of the year, and it will become taxable. So the thing here is, like, you need to show the relevant bills, and the company will provide this particular part of your income as tax free allowance. So with this you can easily save around 15,000 rupees per month, which is 1.8 lakh per year. So you won't be saving 1.8 lakh as tax. 1.8 lakh of rupees from your income will be tax free. So deductible, that is your taxable income will be reduced by 1.8 lakh rupees. That's what it is. So that's the first thing. Now the second, that is ATC. So everyone would be aware of this. You can claim up to 1.5 lakh rupees under ATC, and you can use various instruments to claim this. That is EPF, VPF, PPF, mutual fund, NSC, insurance, SSC. So there are a lot of investment options available to claim ATC deduction. So the limit is 1.5 lakhs. So anything beyond that, it won't be considered for the tax deductions. But up to 1.5 lakhs you can claim as a deduction. So that's the next option. And the next is NPS. So that is 50k rupees deduction is provided by NPS under section 80CCD 1B. So there are two sections in NPS under which you can claim the deduction. So this is the first one, which is 80CCD 1B. This is voluntary contribution that anyone can do, and the limit is 50,000 rupees per year. And likewise, you can also put 10% of your basic pay directly to NPS through your employer. Okay, so this is through corporate NPS route. So you can inform your employer to deduct 10% of your basic pay and contribute towards NPS. So again, this is voluntary. This is outside the EPF deduction that every employers do. So this is outside of it. If you want, and on top of that, you can contribute 10% of your basic towards NPS, and that falls under ATCCD 2. So you have two provisions under NPS under which you can claim tax deduction. Likewise, medical insurance premium. So you can put medical insurance for yourself or your family, and any expenses incurred on that can be claimed as a medical insurance premium payment. Okay, so that is another deduction that is available for everyone. And next comes the critical one, which is HRA, that is house rent allowance. So almost every single taxpayer would be claiming this, especially if you don't have a house, right? So if you are renting a house somewhere, you can create a house rent agreement with your landlord, and you can use that to save taxes. So there is a formula to calculate what is the eligible amount for HRA. So you can use that to find how much is the eligibility for you, and you can easily claim it through your employer directly. They generally would have a portal where you can submit your tax receipts and rental agreements, and they'll be able to get this deductions for you automatically. And the next thing is housing loan interest payment. Okay, so we are not talking about the capital repayment. We are talking about the interest payment. So this comes under separate section outside ATC. So with this, right, you can easily reduce your taxes further. So if you're paying housing loan, and the interest component would be claimed as a tax deduction. So with HRA and housing loan component, right, so you can easily reduce your taxes by 2 to 4 lakhs easily. So that is another advantage that is being provided to all the taxpayers. And now the next deduction is 1 lakh under long-term capital gains tax. So long-term capital gains is taxable only beyond 1 lakh rupees. So if you are someone who is investing in stocks and mutual funds, right, every year you should be booking profits so that you can claim this 1 lakh rupees long-term capital gain free exemption. So this is for anyone. It's not just for the employees, but a lot of employees generally will start investing during some point in their life, right? So they should keep on booking the profits as well, especially at least until 1 lakh rupees per year under LTCG, so that they can claim those incomes as tax-free deduction. Otherwise, you have to pay 10% as taxes, which is unnecessary. So if you keep booking profit, your taxable income in the future will also get reduced. And likewise, there is another provision, which is the interest that you get up to 10,000 rupees under the savings account, right? So that is completely tax-free. So if you have a savings bank account with one or two banks, and if you have money somewhere sitting in that account, any interest earned on that, right? Some banks will put the interest every month, some will deposit the amount every quarter, but any amount that you get up to 10,000 rupees as interest, right, that can be claimed as tax-free income. So if you're someone who have 1 or 2 lakh rupees in your sitting in a saving account, any interest earned on that will be mostly completely tax-free because of this particular deduction. And I'd like to point out that almost all of these deductions, right, that is available only in the old tax regime. So if you switch to new tax regime, most of these exemptions will go away. So that is an exemption free regime. So you can use an online calculator to see how much income you are getting under each of these categories, and put it into relevant fields, and decide which regime is better. And if you think old regime is better for you, then you can plan on how to claim these exemptions in an optimal way. So that is how it should be done. So do you think whether I have missed out on any of the frequently used tax saving options, or are you using any unique tax saving options that we haven't talked about in this episode? If so, please let me know in the comment section. I'll be happy to learn as well. And if you have any queries, comments, or feedback about this episode, leave it down in the comment section. Also, hit the like button if you've liked this video, and share it with your friends if you find it useful. Also, subscribe to our YouTube channel and click the bell icon to get notified whenever we upload a new video or conduct a live session. Thanks for watching. Have a great day. Goodbye.